Okay, so this is Hanson Pepple, and I remain your host for the Forex Focus for the week starting tomorrow, Monday, the 24th of February 2025. Um, if you're a member of the FX to Freedom group, you would understand that we have made this a ritual to always analyze the market ahead of the week. So I want to believe that you are prepared and that you are ready to be a part of the session today. Um, the reason we are always doing this is we don't want to be trading blindly. And they said, he who fails to prepare has already prepared to fail. He who fails to plan has already planned to fail. He who fails to plan has already planned to fail. So we always have to plan the week so we don't just jump on trades anyhow, just like the rest of the other people who are trading the market. Okay, so we always do this to understand the reason why we make our trading decisions and whether we make a profit or not, to always know that we have made the best trading decision irrespective of the outcome. And if you are a forex trader, um, you will understand that anybody can trade the forex market. Just anybody, your grandmother can place a trade and make a profit. Yeah, your grandfather can place a trade and make a profit. In forex, there are only two options: either you make a profit or you take a loss. All right, and it's just like throwing two coins. Yeah, so you throw a coin and it's either a head or a tail that will land on the floor. Right, so anybody can, jump on the forex market, take a trade and make profit. And anybody too can take a loss. Anybody includes whether you're a professional or whatever, anybody can take a loss because the forex market is more than 80% random. Yeah? The forex market is more than 80% random. Record has it that just about 5% of forex traders make money in the forex market. So, how do you trade and differentiate yourself from someone who is not a professional? How do you trade and differentiate yourself from a grandfather or a grandmother that you just hand over your phone to trade for you? Okay, so you need to have an age. You need to have an age. You need to be able to have a reason for the decisions you are making in the forex market. Okay, and so we want to do this to increase our odds, to increase our chances, to put the odds in our favor. Okay, that's the reason, that's the primary reason we are always and will always analyze the forex market. Okay, so we are always going to analyze the forex market because we want to have an age. We want to have a reason for our trading. We want to have a reason for our trading. Okay. So for today, we are going to be looking at the market outlook for BTC and for gold. For BTC and for gold. And if we have more time, we will be able to look at the Forex outlook for GBP, JPY, GBP, USD. Okay, those are two other pairs that are interesting to me and that I like us to look at if we have time. Okay, so today you're going to join me. I usually use Trading View for my trading. I use Trading View for my trading. Yeah. So quickly, I'm going to share my Trading View screen with you, and so you're going to be seeing live how I just before we dive in, I would like to clean up all of the indicators that we used last week. Okay, so I'd like to clean up all of the indicators we used last week so you don't get confused and so you know how we apply the indicators to the charts. All right, and you're going to know the reason for every indicator that we add to the chart. You're going to know the reason for every indicator that we add to the chart. Okay, so I'm going to take this off. Almost there, almost there, almost there. Let's also take this right now. Okay, but yeah, we have a clean chart right now. So usually what I do as part of this session to forecast what will happen next week is that we are going to of what happened last week, first of all. So we go to the time frames and then we scroll down to the one also includes what happened from Monday till the 17th till today, the 23rd of February. Take a look at the last candle. We are still on Sunday, and Sunday is part of the previous week. We will start a new week on Monday. Okay, a new trading week is starting on Monday. Okay, so look at the previous week for gold. Yeah, this was the previous week. Look at the previous week. So this is the point. The candle opened here last week. The candle opened here at 2881.514. Yeah, and it closed here at 2832.52. Okay, so that's what happened this week that is ending today. All right, that's what happened on the weekly time frame. So we can just see that last week was bullish. Last week was bullish. So this is 1, 2, 3, 4, 5, 6, 7, 8. So we could say that the last 2 weeks of sorry, the last 2 months have been bullish for gold, and gold has been making new all-time highs day upon day, week upon week. On this week, it made an all-time high. Following week, it made an all-time high. Following week, it made an all-time high, all-time high, all-time high, another all-time high, all-time high. And then if you look at the high of this candle, you would see that it was also higher, right? It was higher than the high of the last week's candle. So another all-time high was made. Yeah, this was two the last week's all-time high was 2943, but this week's all-time high got to 29 2953 or thereabout. Okay, so and I want you to see the higher highs on the weekly time frame. We have been having higher highs. You can see lows. The higher highs, you can see the high of the new week being higher than the high of the previous week, and so on and so forth for the last 8 weeks, which means the last 2 months. And then the lows, the next low is higher than the previous low, next low higher than the previous low, next low. So the market is extremely, extremely, extremely bullish. Gold market is extremely, extremely bullish. So, first impression on the weekly time frame is that next week is also going to be bullish, following what has happened in the last 8 weeks so far. Yeah. So we in the first impression we are seeing that next week is also going to be bullish, and probably a new all-time high will be created. So possibility for a new all-time high, possibility for a new ATH. Okay, there is a possibility for a new ATH, right? And fundamentally, I can tell you for free that gold will continue to be bullish as long as we continue to have the current situation in the US. Remember that Donald Trump has just won the election and got sworn into office, and he has come with a lot of policy changes. in business, in finance, and in many aspects of the economy. And all of those activities and fundamentals are increasing the drive for higher price in gold, yeah, because people see gold as a safe haven. Yeah, they feel that gold is a safer place to keep their money when there are uncertainties in the economy. And you know that gold is pegged to the US dollar. So whatever happens to the US dollar has impact on gold. So any news that negatively affects the US dollar is going to cause an increase in the price of gold. Okay, so let's move on to the daily time frame. Though we've seen that on the weekly time frame, the week was bullish, what happened day by day, right? What you want to know, what happened day by day? How was Monday? How was Tuesday? How was Wednesday, right? How was Thursday? How was Friday? Okay, so here you can see the days of the week. Remember that gold trades for 5 days in the week. So that being said, we could see here that on Friday was the last day. You can see candle 1, 2, 3, 4, 5. So this candle here was Monday. Yeah, this red bearish candle here was Friday. This red bearish candle here was Friday. All right, on Friday, the market was bearish for gold, and it got to this low here. It got to this low and closed around here. And on Monday, the market picked up 2881, picked up from there, ran for 2 bullish days, Monday and Tuesday, had a little pullback on Wednesday. All right, had a pullback on Wednesday, and then created a kind of a doji candle. There was a kind of indecision between buyers and sellers on Wednesday. All right, and sellers seem to have some upper hand. Right, you can see the wick. You can see the wick up and the wick down. Then on Thursday, buyers came in, took over, drove price up. And it was on Thursday that the all-time high was created. Remember, I told you that within last week a new all-time high was created, was made for gold. So that happened on Thursday, right? When we zoom in, you will see the exact hour that the all-time high happened. So on Thursday we had an all-time high, and then on Friday, price tried to retrace. There was a kind of a retracement. All right, on Friday we see some kind of retracement. We see some kind of retest. Okay, so if you check from where this double bottom was created, right, and this bullish run started, you would see that most of the time the highest that price goes down was 2 days at a stretch. Yeah, 2 days here. Apart from those two times, each price pulled back for 1 or 2 days, mostly for one day each. Here it was one day, here it was one day, here it was one day. Then it went up all the way for 5 straight days, then had one day retest. So there is a tendency that price will still go up based on what has been happening in the past. Yeah, but we still cannot make a trading decision based on this 1 hour time frame. But we could see that on Friday, sellers were really trying to get a piece of the cake because buyers have had so much to themselves. Buyers have had so much to themselves. So sellers were trying to have a little bit of a piece of the cake. And most times when there is when there is an all-time high created, momentarily there will be some pullback. So let's assume that the pullback on Friday was a reaction to the all-time high on Thursday. Yeah. Okay. So let's zoom down to 4 hours to see areas of supports and resistance within the week. Within last week, um, were there areas of support? Were there areas of resistance? Were there places where we could have joined the market and made money? Okay, so yes. Now, if you look at the chart, you will see that we basically have on my chart, I basically have two EMS, two exponential moving averages. Yeah, the 50 moving average, which is the one up, and the 200 moving average, which is the one down. And this moving average usually signals reversal and trend following. Okay, so at this point, this was somewhere on the 9th of January, somewhere on the 9th of January, price crossed over, I mean, the 50 period moving average crossed over the 200 period moving average, and that was a signal to say that okay, we have entered into an uptrend with that crossover. Yeah, so we entered into an uptrend since the 9th of January, and price goes up, and then it comes to retest the 50 moving average. It comes to retest it on the 4-hour time frame. So if you are a day trader, yeah, if you are a day trader, one of the most significant time frame to look at and to make trading decisions is the 4-hour time frame. Yeah, the 4-hour time frame is one of the most significant time frame to look at if you are a day trader. Okay, so we see that each time price goes up, it comes down, it goes up, and at this point, even on top of the 50 EMA, there was a double bottom. Okay, so let me show you how that double bottom happened. So we had a pull down here. Okay, we also had within that period, we also had a pull up. Then we had a pull up here. Then there was another pull down. It came back down, and then it also went back up. It went back up, crossed the neckline, and created a new high. Okay, so if you look at this, this was a double bottom, and this is usually a reversal signal, because at this point, because the 50 moving average serves as a primary trend line for us. We could also use this as a primary trend line. Now, in between primary trend lines, you could have secondary trend and tertiary, should I say secondary and tertiary or minor trends, right? So we have a major trend, which is the primary trend, which is the the uptrend. Then once in a while we have a retest, or we have retracement, which also forms trend. If you check this on a 1 hour, okay, let's check this on a 1 hour, you see how much of activities happened within that time period. If you check it on a 1 hour, okay, so we want to go to where we put the lines on a 1 hour. Let's see, on a 1 hour is right at the back, right at the back. Okay, so we want to see, okay, yeah, I can see the lines that I put earlier. So you can see this on the 1 hour time frame. So you see, this was, someone could say that this is a downtrend, isn't it? Someone could say that this is a downtrend from this up to this point. It's a downtrend, yeah. So it got there, and it rested on the moving average, and then it went back up, came down, and then went up all the way. So you could see that in between the 4 hour time frame, you're having some secondary and minor trends happening, yeah, which you could also make money from. But generally, you have to have your eyes on the 4 hour time frame. Generally, you have to have your eyes on the 4 hour time frame, because it provides the most basic indication of where price is going uh, in the short term. Yeah, so you could see this. Okay, so price keeps retesting the trend line, which is also the EMA, and goes back up. So based on that, we would expect price to come down. However, let's see. There's a resistance. There's a point of resistance at this level. Let's put a trend line here. So we notice there's resistance. There's resistance around this level. There's resistance around this level. Okay. So what I mean here is that for some time now, price has not gone too far from this area. For some time now, on the 4-hour time frame, price has not gone too far from this area, as you can see. Yeah. So price went up, got to this zone, came down, came close to the 4-hour EMA, went back up, got to that same area, and price was rejected, and then price was pushed back to the trend line, which is also our EMA. It went back up, tried crossing it, came back, went back up, created a new all-time high, right? So this all-time high happened on Friday. It happened on Friday, yeah? Okay, let me see. No, it happened on Thursday. Thursday was 28th, so it happened on Thursday. We've already established that. Okay, then it came back down. So for now, we would expect that price has a new area of resistance, which is at the area of the all-time high. Okay, so it broke through this first resistance. It broke through that first resistance and has created a new all-time high around this price level, around 29554. Let me see. Around 29. And let's also push this. Let's also push this. Okay, let's just stop it right here. Okay, so in the coming week, which is next week, price is more likely to range within this area. Price is more likely to range within this area. Okay, so but before that, there's also a possibility that price could come down to very close to the trend line at 2916. So there's also a possibility of price coming down to this area. There's a possibility of price coming down to this. So price could come close to the trend line, because as the trade is happening, let me put an arrow there. So price could come down. So we are expecting resistance, support for next week. We are expecting the support around 2919, around 2919 area. Okay, yes, and then we expect price to move up from that point. We expect price to move up the new resistance zone. So resistance is at 2955, probably around that area. Okay, 2955. Okay, so we hope to trade between 2919 and 291 and 29. But if for any reason the resistance is broken, okay, if this resistance is broken, price could also push up to an additional probably 200 pips next week. Okay, price could push up to 200 pips next week. Yeah, so let's say of course it goes up and comes down. So let's say if it pulls back, if it comes back down, it may stop around this point. It may have a push up from that point. It may have a push up from that point to about 200 pips at 2975. around 2975 probably. Okay, so there's a possibility that price could go up to 2975 by next week. Okay, so let's just put a line there. All right, so this is our projection um, for next week. This is our projection. So another area of resistance is likely to be around 2975. Okay, likely to be around 2975, and in between this there will be a lot of movement. Yeah, so this is what we are predicting, that price is likely going to be bullish again for most of next week, but in the first few days, probably from Monday and Tuesday, it could come down a bit to retest the trend line area or to touch the 50 EMA. Okay, and after that it will begin to push up, and then the first major resistance is going to be around 2955 area before it retraces back a little, and then from there it can push up to the 2975 area. Okay, so this is what we expect to see, or we are likely to see by next week. Now let's follow this up with a trend meter. Let's follow this up with a trend meter. Now if you check the technical analysis trend meter for gold, yeah, if you check the technical analysis trend meter for gold, it says what? It says buy. Yeah, so gold is currently buying. On a daily time frame is buying. If we go to the 4 hour time frame, we also see a buy, and we are making this analysis using the 4 hour time frame, so we are also seeing a buy. So the trading view trend meter is in line with our projection. Remember, we didn't look at the trend meter before doing our analysis. We did our analysis before checking the trend meter. Okay, now to further clarify things about the trend meter, let us take a look at some of the indicators. So oscillators say it is neutral, but moving averages say it will be a strong buy. Okay, and overall we are seeing a buy indicator from the trading view trend meter. All right, so both us and the trading view trend meter are having the same analysis of a continuation of the bullish run for XAU USD, which is gold. Okay, so those are the levels, those are the areas. Now, how you take a trade, despite knowing that the trend is still or most likely going to be bullish, you can still take a bullish trade and not make money. How? When you go buying at the resistance level. Okay, for example, we are looking at price to dip a little before pushing back up. Yeah, so if you go buying right away when the market opens, you may lose some money. Yeah, so you want to watch either the price crosses above this resistance area where it is currently, or it comes below. If it comes below this area, all right, you can sell temporarily. Okay, but then when it gets to around 2916, price will reverse, or price is expected to reverse and go back first of all to the major resistance area, which is the all-time high of last week at 2954. Right, there might be a rejection of the price again, it comes down, then next push up will take it above that point. So let's keep this in mind and let's watch as the week unfolds. So thank you, and let's take a look at what will happen in the gold market. So thank you so much, guys, and I hope to see you as we also analyze the gold market. Okay. So still right. So I'm going to end this and then start a new stream for the gold for the BTC market rather.